Good morning, everyone, and a very warm welcome to our first ever CASA Consumer Engagement session. On behalf of CASA, we sincerely appreciate you taking the time to join us. Your presence highlights the importance of understanding debt, financial well-being, and making informed financial decisions. I would like to extend our sincere appreciation to the Debt Counselors Association of South Africa, the National Debt Counselling Association, and our sponsors for this session, TransUnion, Groups Are Us, and Amplifin for partnering with us. Your collaboration ensures that today's discussion is balanced and grounded in real industry expertise, and it will also enable us to continue driving consumer education and promoting financial awareness across the country. Our focus today is entirely consumer-centered. While we will be discussing various debt relief mechanisms, it is important to emphasize that debt counseling is not the only option and nor should it be the first. It is rather an alternative route to be taken after other avenues have been exhausted. Your first point of action when you realize you are struggling to keep up with your credit agreements should always be to approach your credit providers directly to negotiate and make arrangements to keep up with your repayments. In this session, we aim to equip you with the knowledge and on how to handle initial conversation, clarify common misconceptions about formal debt counseling processes, and create space for meaningful engagement. I strongly encourage you to stay until the end of the Q&A session where you can ask our panel questions directly. My name is Miranda Tladi. I do communications and stakeholder engagements here at CASA, and it is my pleasure to facilitate this session. Thank you once again for joining us. Because today is our first consumer engagement session, many might have questions regarding CASA, who we are, what we do, why today, and many more. So I'll dive into it. CASA is not just an association, but a home that brings together ethical and professional credit providers. We promote responsible credit by advocating for responsible lending and fair credit practices, and strongly believe that a strong credit industry must be built on trust, transparency, and accountability. That will result in fair and sustainable credit industry to benefit both the consumers and the providers. We support a healthy and sustainable credit that contributes to our country's economic growth by promoting responsible credit practices, supporting regulatory alignment, and driving consumer education and financial awareness initiatives. Because as much as access to credit is important, it must be responsible and informed. Our values include integrity, because we do what is right, even when no one is watching. Accountability, because we take responsibility for the well-being of the industry. And inclusiveness, because to us, every voice matters, including yours as a consumer. These values guide why we host sessions like today's. Over the years, it came to our attention that many South Africans are experiencing financial pressure and are in need of assistance. But because debt counseling is often misunderstood, many consumers enter the process even if it's not necessary, or without fully understanding the implications, something that the industry regulator is definitely against. So today's session will provide a balanced insight from key industry bodies that will make you understand that debt counseling is not your first point of contact. It is not for everyone, and it's definitely not an escape from your credit agreements. We want you to know and understand the options available to you before taking any major decisions that might not be pleasant to you in the long run. With everything that I have put to you, we will now move to our first presentation of the day. To lead our first session, we are joined by Drisha Pillay from the Debt Counselors Association of South Africa. She will be presenting on understanding debt stress and debt counseling process, helping us identify early warning signs and navigate the practical steps towards financial relief. This presentation will help unpack what debt stress looks like, when it may be time to seek help, and how the debt counseling process works in practical terms. Trisha, over to you.
Sorry. Now can you hear me? Good morning, everybody. Yeah.
Good morning, Trisha.
Yes, I was actually on mute there, right? Yeah, I just wanted to say thank you to CASA for the opportunity to be here on behalf of the CASA. I'm just going to try sharing my screen quickly. Just let me know if you can see it. Uh,
Yes, we can see it. Thank you, Trisha.
okay. All right. Do you see it now? One second. I think I'm off now again, right?
Yes, we see your face now.
Okay, one second. It was showing and I think it just came out. Uh, Sorry, guys, just give me a second. Okay, tell me if you can see this.
Yes, yes, it's here. Thank you.
Okay, cool. All right. So again, sorry about that, guys. So today we're going to unpack what debt counseling truly means, and like Miranda mentioned, it goes beyond the stigma and misconceptions of what it truly supposed to be. So debt counseling is not about it's not about failure. It's obviously about structured intervention. It's about legal protection. It's about restoring financial stability. And obviously, before you enter debt counseling, you need to check what avenues you can get out there before you commit yourself to the process of debt review. So, what we're going to do in today's session, we're going to explore when debt review becomes necessary, how the process works, what consumers should expect, and most importantly, how it creates a pathway back to dignity, to control, and to long-term financial wellness. So let's begin. Okay. So when it comes to debt review in South Africa and consumers are feeling overwhelmed, remember that you're not actually alone. There are actually millions out there that are facing some challenges. So we all experience the rising cost of living, unexpected expenses, example, an unexpected death in the family that sets you back with your repayments, reduced income with regards to retrenchment or short time, increasing interest rates. So debt can build up slowly over time, and before you realize it, it feels impossible to manage. Again, to the consumers out there, it does not mean you failed. It means that you need the right support and you need to find the right avenues that can assist you out there. So again, what is debt counseling? So if you are feeling overwhelmed, debt counseling can assist those consumers that are over indebted. So, debt review is a legal, structured process designed specifically to help people who are over indebted. Again, it's not about running away from your responsibilities. It's about recognizing your debt, reorganizing it into one affordable monthly payment, protecting your assets, and giving you breathing room. So debt review is actually there to help you regain control. You can reduce stress and you can rebuild your financial future step by step. So debt counseling, again, it's not about cancellation of debt. So that is a misconception. So review does not erase the debt that you have, okay? You are still responsible for paying what you owe. The difference is that your repayments are restructured to become affordable based on your income and living expenses. Debt counseling is not a payment holiday. So it is not a break where you stop paying and deal with it later. In fact, you continue paying every month, but through a structured, consolidated payment plan designed to protect and ensure fairness to your credit providers. It's also not a quick fix. So again, it requires commitment and discipline. It's designed to provide like long-term financial stability. It's not a temporary solution. The goal is obviously to help you rebuild and complete the process successfully, not just survive the next few months. Debt counseling is also not a way to avoid paying your debt. Debt review is about accountability. It shows your willingness to pay in a responsible and structured way. It also protects you from legal action while ensuring that the credit providers obviously receive payments according to a court-approved, legally binding order. So again, who is debt counseling for? So if you find that you're missing payments or you're short paying your creditors monthly or paying late, it actually just means that you are going through early warning signs. It usually means that maybe your expenses are higher than your income, and it puts you in a worse off situation than you've been in the previous month. If you're receiving legal letters like a Section 129 notices, you receive summons, you get calls from attorneys, this obviously means that your accounts are moving into legal action. Using new loans to pay off existing loans. This is quite common where you find that you are in a situation on a monthly basis where you cannot meet your commitments. So you go to a loan provider to obtain a loan to pay off existing loans. Or you're probably using your credit cards to purchase groceries or cover installments. So this is just overwhelming in the sense that you're not meeting your debt commitments monthly. You're feeling overwhelmed, okay? So feeling financially overwhelmed. If you're constantly stressed about money, avoiding calls or struggling to buy groceries after your debit orders goes off, then this is definitely a warning sign. At risk of losing your assets. So again, if you're behind on your bond repayments or vehicle finance and worried about repossession or losing your home, early intervention is critical. This is not for those managing comfortably. So if you're managing to meet your monthly commitments without difficulty and you're not under financial pressure, a debt review may not be necessary for you. Okay. So it does not mean if, the solution is always debt review. If, in 1 month you might find there is a short payment on a particular loan due to a change in circumstance in your household, then it doesn't mean that you have to go under debt review for that. There are alternatives out there. Those avoiding responsibility, again, it is not a way to escape your debt. It is a responsible legal process that shows your commitment to repaying what you owe. Okay, so if you're responsible for taking that loan, it's your responsibility to actually pay that loan. It is not for those unwilling to commit to a structured plan. So it's important that you know that it is discipline and it is consistency. If you're not prepared to follow a structured repayment arrangement for obviously the duration of it, this obviously may not be the right solution for you. But when is debt review appropriate? So the appropriate time will be when you're falling behind on contractual installments, When clients obviously start missing or short paying on their installments, it's definitely a clear sign that debt review will help to be more manageable. Creditors calling daily. So if you get in constant calls indicating that your accounts are in arrears and the pressure is increasing, if your assets are at risk, so you're at risk of legal action, repossession of vehicles or attachment of property, and obviously emotional and financial stress. This is one of the big factors currently in South Africa where your emotional stress affects your mental well-being, affects relationships, your overall stability. It's not just finances, it can affect you emotionally, which is definitely a warning sign. Okay, so now I actually want to look at a very simple real life example. So Tabu and Lerato earn a combined income of 28,000 per month. However, the debt repayments, as you can see, is 21,500, which leaves very little to cover their basic living expenses, such as their food, their transport, utilities, etc. Their essential living expenses is showing at 14,000, which creates a monthly shortfall of about 7,500. Their vehicle is at risk. Okay, so as you can see, um, this means obviously that their situation does require some sort of intervention. Okay, so this example that you're seeing in front shows how quickly financial pressure can build and how debt review can help restructure repayments in a more sustainable monthly amount. So what has changed? They consulted a registered debt counselor. A full affordability assessment was done. Their debt was restructured into one affordable payment, and obviously a legal protection was applied, and they both were committed to the plan. So the turning point here is a few years later, all short-term debt was paid off. They definitely would receive a clearance certificate from the debt counselor. Their vehicle was fully paid, only their bond remained. Today, they have stability, an emergency fund, and restored peace in their own. So debt counseling was not the end, it was actually the turning point. Okay, so obviously when you complete the process, except your home loan, you will receive a clearance certificate and you're rehabilitated and you can re-enter the credit market immediately thereafter. Okay, you can even buy a vehicle, you can upgrade your home, or you can apply for funding, for example, a child's education. Okay, so the best part is obviously hope. So debt counseling is not a financial debt sentence. It stabilizes your household budget and gives you hope for the future, reduce financial stress, rebuild a credit profile, and regain the ability to access credit responsibly in the future. So how do you go about choosing a reputable debt counselor? So firstly, always look for a registered debt counselor. So you can find a legitimate debt counselor that's registered on the on the NCR site, and you can use their DC number to search to see if they are, they're practicing and the number of years they're practicing and if they are actually legitimate. You can also do a proper affordability assessment. So a full and detailed affordability assessment must be conducted, including income, expenses, and all credit obligations before any recommendation is made. Make sure that you are explained about all the fees. So all fees must be clearly explained upfront in line with the NCR guidelines. There should be no hidden or cash only arrangements. So if you see that, then that is a warning sign. It should be on official documentations like your Form 16s, your Form 17.1, 17.2s. They should be registered with an association like your CASA or your NDCAs, and then you know that these debt counselors are reputable. Okay, so there are some red flags. Okay, so if you see adverts out there that says we clear your debt. So you need to be careful, okay? Because if they are making such unrealistic promises, then they are not guaranteeing that your debt will be cleared. Again, always ask for a valid registration number to confirm that you are dealing with an authorized professional. Avoid anyone who insists on cash-only payments or asks you to pay outside of the formal debt review channels. You should never feel pressurized to sign documents immediately, especially if you are sitting with a debt counselor and consulting, and then the debt counselor is like, no, 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 you need to sign immediately. We need to process this application. So if this debt counselor is forcing you into signing, then that should also be a warning sign, because you should be allowed to take some time to think about it and then get back to the debt counselor. So as a consumer, you definitely have rights. And the first one being fair treatment. Consumers are obviously treated in line with the National Credit Act, ensuring creditors engage through a structured and regulated process. Transparent fees. All fees are regulated and clearly disclosed upfront. Legal protection. Once under debt review, legal action is paused, provided payments are maintained, offering protection from repossession and enforcement. Your clearance certificate upon completion. After successfully completing the repayment plan, a clearance certificate is issued confirming that the consumer has fulfilled their obligations and may begin rebuilding their credit profile again. Your responsibilities as a consumer. So it's very important that consumers be very honest, okay? Clients must disclose accurate financial and personal information to ensure a proper affordability assessment is done, and obviously sustainable repayment plans. Submit documents on time. So delays in obviously providing documents like your supporting documents can obviously slow down the application and restructuring process. Make consistent payments. It's important that maintaining the agreed payments per month is crucial to remain protected under the debt review plan. And if there's any changes in income, it's very important that you communicate this early to the debt counselor so that it can be reviewed and adjusted where necessary to avoid terminations, etc. Okay. And obviously, just as a final message before I end, debt counseling is not failure. It's stability, it's dignity, it's hope. So a structured debt solution guided by the National Credit Regulator helps consumers regain control of their financial future and move towards long-term financial wellness. Thank you, guys.
Thank you so much, Tarisha. That was a very insightful presentation. So yeah, I think I heard you well. It is not a payment holiday. Debt canceling is not a quick fix. I hope everybody's listening and they heard that. And somebody mentioned in the chat that so basically you must be willing to commit to the structure that is offered to you when you go under debt canceling. Sorry. So somebody mentioned, Elaine said that it's no use to go under debt canceling and then take the money for gambling, you know.
Yep.
So when you go for debt canceling, it's very important to actually commit to the structure. Be sure that you want help, this help that is offered by the debt
Yes,
counselors. Am I right,
that
Risha?
is correct. Absolutely correct.
Oh, thank you so much. We really appreciate this. All right. So next, we're pleased to welcome Sebastian Alexanderson from the National Debt Counselors Association. He will be presenting on life during debt cancelling, completing and rebuilding. While many discussions focus on entering debt cancelling, this segment will provide valuable insight into what happens during the process, the commitment required, the realities you can expect, and most importantly, how you can rebuild financially once you complete the program. Which is very important because debt cancelling is not just about managing debt. It is also about restoring financial stability and creating a sustainable plan forward. Sebastian, thank you very much for joining us. Over to you.
Hello, good morning, everybody. Thank you for that wonderful introduction. Hello, Trisha. I will try to make sure I can do as well as you did. So by way of introduction, my name is Sebastian Alexanderson. I've been helping people with debt in 3 different countries, both Canada, the UK, and now South Africa for over 24 years. We've been helping people walk the road to financial freedom for a long time, and it's a pleasure to be speaking with you today and to sharing with you a little bit about the good work that we do, how we do it, and what happens in the end in order to get you out of that road and onto your next goal in life. So I'm going to be sharing my screen with you just now. Okay. All right, just shout if you can't see it, but here we go. So life during debt counseling. As Trisha mentioned, there are many reasons why individuals can find themselves in financial distress. As we mentioned, some people have a change in circumstance. They've lost a partner, they lose a job, something happens overnight. For many others, we watch people find themselves slowly but surely entering into a debt spiral, unable to find themselves with any money at the end of the month, borrowing from Peter to pay Paul, and just never actually seeing the light of day. And, as mentioned a little bit earlier, debt counseling is not a Band-Aid solution. It's not something that you just pull out and hope that it's going to fix all your problems. Unfortunately, we are also not psychologists, right? We can help you with your budgets, but we can't help you with your gambling problems or your drinking problems or the other problems that we don't talk about. But what we can do is help you find peace of mind at night by helping you find the correct solution that will get you to the finality of being able to become debt-free within a shortest period of time and with the most amount of help and legal protection possible. So where do we begin? Well, on any journey, I like to start with the end in mind, right? So if we consider that the end of debt counseling is our goal. We want to be debt-free. That's what we want to be. For whatever reason, we want to be debt-free, mostly peace of mind. But some of us want to be able to get on with our life and be able to start building our good debts, our assets, and being able to buy a home and be able to create that journey that we want so badly for us and our family. Now, in order to get there, debt counseling requires several steps, right? And I would like to say that for us debt counselors, the majority of the work happens in that first 6 months of the debt counseling phase. And that's probably the most uncomfortable phase for many of the people joining us. But what we're trying to get to is we're trying to get you to a structured phase where you've paid off any legal fees or debt counseling fees, that the money that you are paying toward your PDA is shaving off your creditors' payments and helping you get closer and closer to your goal of becoming debt-free. We do it by using a registered payment distribution agency, which guarantees that the money is going to be sent to the correct creditor and gets audited every month by the National Credit Regulator, making sure and keeping the payment distributions agencies in line and the debt counselors in tow. And most of all, if we're able to get you to that phase, then you are legally protected from anything that might happen to you along the way should any of your creditors decide that they want to take legal action. So, well, how do we do it? All right, first, we need to build a sustainable monthly budget. So we sit down with you over the phone in most circumstances, and we look at your finances. We look at your bank statements, and we try to build a sustainable monthly budget. Because, as mentioned by my colleagues, this is not an overnight solution. This is something that we're going to need to stick to. If anybody thinks that they're going to enter debt review and want to hop on and off, then it is not the right solution for you. We need to make sure that we get a monthly budget and that you're going to be able to afford that budget over time. Now, what we will do in the meantime is once we've got that budget, we'll contact each and every single one of your creditors and we'll say, look, this is the new reality of the situation. This is what we're able to offer you in terms of repayment program. The consumer is dedicated for anywhere between 36 and 60 months, let's say on average. And what we're asking the creditors, and the creditors will often come to the party should we meet the right proposal, is to reduce the interest, freeze any charges, and negotiate reduced minimum installments in order to protect you from any kind of legal action. Now, once we get to that phase, your responsibility as a consumer is to make sure that A, we both agree that this is the plan, okay? And if that is the plan, then we need to make sure that you pay every month on time. Now, let's be realistic. Life happens, right? Those school fees come smashing in and we have extra clothes we need to buy. We understand. In debt counseling, there's not much room for leniency, right? We need to make sure we try to make a plan to make those payments and ensure that the budget allows us to save for those eventualities and those emergencies. But if anything does happen, we need to stay on top of it. You need to inform your debt counselor as soon as possible so that we can communicate with your creditors about any change in circumstances in real time. Right? We'll be able to speak to them, and depending on the circumstances, we'll navigate that problem when we come together, right? But for the most part, if you agree a budget and you can keep to that budget, then we can get you that court order. Then you know that on this date, after this many payments, you're going to be debt free. Now, along the way, a lot of our customers, and some of our customers don't, but a lot of our customers ask, how can I pay a little bit more? How do I get debt free sooner? Well, the good news is in debt counseling is that at any point in time, you can start making more payments. Now, the opposite is not so true, right? We don't want that. It's very hard to go down in payments, but it's also very easy to go up in payments. And every year, what we should be doing as debt counselors and consumers is finding the time to sit down and say, okay, that first year's gone by, or that second year's gone by. How do we make a plan now? Have you had a bonus? Have you got any increases? Let's not wait 5 years to become debt free. Let's see if we can get you debt free or sooner. So if you've got salary increases, overtime bonuses, any type of inheritance or whatever, it's often asked that we spend some time reviewing that circumstances and trying to get you debt free sooner. Those annual reviews are important and are a requirement by our credit providers, right? It's important for us to reassess where you're at this point in time, good or bad, right? And life goes either way. So once a year, if we can, let's review your income and your expenses, check your payment performance, making sure that, there's not a time of year where you started falling behind, adjust the installments where necessary. Make sure that you're not overpaying, but not underpaying, right? And if you do find yourself with a little bit of cash, speak to us and we can try and get some deals with your creditors to see if there's anybody that's willing to do a reduced payment in order to help you along on that journey. So, common mistakes in debt counseling, right? And this is something that I wish from the bottom of my heart that we could do more. I'd love to speak to my consumers more regularly. That first 6 months, we speak to our consumers over and over again. It's wonderful. But after 6 months, things start to settle down. Consumers go along their way. And sure enough, everything is going well, right? But one of the mistakes is to stop speaking to each other, right? So please make sure you're constantly speaking to your debt counselor, even once a year after that first 6 months is okay. But trying to get to those annual reviews is important, right? Our goal is not to keep you on debt counseling. Our goal is to get you debt free. So especially if you are in a place to be able to make more payments, rightly so, your creditors will have negotiated lower interest payments. They will have frozen the charges, and they're expecting us to be able to speak together to say, hey, is there a way that we can increase those payments and get that customer back into the ring? And if we don't do these sort of things, of course, we open up ourselves to the ability for the creditors to say, hey, we haven't got the information, or your customer is no longer responding. It may cause your debt review plan to be extended. It could cause your creditors to terminate that and reinstate the interest and charges, which nobody wants, and it could re-expose you to legal action. So constant communication, I think, makes the world go round a whole lot better, not just in debt counseling. Okay, so now we know why we're in debt. And of course, before we go into debt counseling, it is our expectation that you have spoken to your credit providers. It is our expectation that you've looked at different options in terms of being able to see about reducing your interest, your charges, speaking to friends and family. And when all of those fail, we are there for you. And we'll get you on the plan, we'll get you through the plan. But then we want to get you to the part that you want the most. How do you get off the plan? Well, in order to get off the plan, you need to make sure that all the debts that were within the program have been paid off in full. Not I'm going to pay them off next month or in the future, that they've been paid off in full. that if you do have a home loan within the program, that you've not fallen behind in the arrears and that your payments are up to date. After that, and only after we've made sure that all your debts have been paid off, do we require you to help us get your paid up letters. And from there, we create a form 19, and we update your credit bureaus, and let's let you know that we let your creditors know, and we basically chase the credit bureaus to make sure that that flag is removed and that you are now debt free and free to go back into the world of credit, should you want to, right? Although we try to get you not to go, we can't stop it. But in saying that, what I need to reiterate, right? Once you finish paying off your debts and you've got that clearance certificate and your credit bureau has been updated, it doesn't mean the journey is finished. It means your journey has just begun. Your credit score will have been restored to a place where it is now ready to start building its credit score again, right? You won't be able to get access to large credit immediately, right? You need to build that slowly in terms of building up that credibility, and rebuilding takes time, right? So how does it work? Like, what do we do after debt counseling in order to rebuild that credit? Well, first of all, the one thing you don't want to do is just jump right back into a whole bunch of debt after being in debt. But should you find yourself in a position where you are requiring to do these things, it's important that we learn from our mistakes of the past and try to get into a place where you keep on with that budget, right? Suddenly, if you've got all that money left over that you're paying over to debt counseling, use that budget to build an emergency fund, right? Try to make sure you don't fall into a place where you have to go back or have to get credit cards at high interest rates or store cards at high interest rates and put you right back into the place that you've just spent so many years trying to get out of. Smart reentry is basically, if you do get any kind of credit, make sure you start small, keep it affordable, make sure you make your payments in full, don't max out those credit cards, right? We're trying to avoid the reentry. As much as we like repeat customers, it's not our purpose here in the world of debt counseling. So we've hopefully spent between 3 and 5 years together now in the debt counseling plan. We've hopefully spent a little bit of time helping you with your budget and any changes around that time. And we're hoping that you continue on with that learning after that and make sure that you start doing maybe a little bit more financial planning, right? Now's the time to be able to review your insurances, look at your retirement savings, your pensions, and just try to live with that structured budgeting program that we helped you build over time, and hopefully will serve you for the rest of your life. Debt review is meant to reset your habits, right? It's not just your balances. So a couple of things then, distinguishing good debt versus bad debt, right? So good debt helps you grow financially, right? Good debt would be like an asset, like a vehicle and or a home. Bad debt is that stuff that comes with high interest rates with no real tangible asset attached to it. The things that we would like to convey at this point is, it's very easy for us to go out and spend when we've got it and we've got access to credit. So just make sure you always think about what you're buying. Is it a need or a want? I think that's probably a speech you've heard many times, so I won't go too much onto that, but it's important to think, if you buy that TV on credit, at 100%, you're going to pay back that TV 7 times more than if you just spent a little bit time saving for that television. So practice contentment. Avoid comparing yourself to others. Emotional spending. Retail therapy is probably one of my favorite ways to get happy, but over time, it doesn't actually work, right? Make sure that you ask yourself the questions, do I really need this? Limit exposure, avoid borrowing, avoid browsing and shopping on apps and sites. Remember the plan. And then make sure you understand how interest rates work, right? Interest rates show the true cost of borrowing. I mentioned the television before. Every Black Friday, I do the same educational video for our clients. Buying that TV at 20 or 30% off on credit and then paying it back over 2 years. You've bought 7 televisions at that point in time, right? So it's important to understand how interest works, help avoid the debt traps and the high interest loans, and help you make smarter decisions when it comes to savings and investment. Okay, over and above that, we talked about the psychology of it all, right? this is the toughest part. This is the stuff that needs to come from you. And some of the, we can share as much financial education as we can, and we will share with our customers. But at the end of the day, you need to be ready for that mind shift. You need to be, it's a shift from coping every day and thinking, am I going to have enough money at the end of the month, to planning and making sure, yes, I'm going to have that money at the end of the month to be able to service my family and achieve my goals. So focus on stability and goals. Build savings, spend wisely. One of my favorite savings tricks is having a 32-day savings account. Can't access that money on an emotional whim or for anything, right? It takes planning for that to come out. Value of delayed gratification. I know it feels good to spend. We love those dopamine hits, but at the end of the day, if you've just come from a debt counseling journey, if you've been stuck in debt for a long time, nobody needs to remind you about the pain of having to pay that interest off every month with no real gains in terms of your financial freedom. Confidence and control. Freedom is gradual. We can't get as easy as it is to become over indebted. Getting out of debt is a gradual process, a little bit like gaining and losing weight, I would think. Responsible choices rebuild credibility, and every good decision counts. So the key takeaways I'd like you to be reminded of from today, from the National Debt Counseling Association. Most important thing for our healthy state of mind: regain control of your finances. Rebuilding takes time, it takes discipline, it takes patience, and it takes practice. Savings, budgeting, and responsible credit used to strengthen your future. Make sure you save, make sure you budget, and when you do borrow responsibly. And debt counseling is about lasting empowerment, not debt relief. It is one of my greatest joys to see people become debt-free and the look on their faces when they finally achieve that goal. And we help so many consumers walk that journey to financial freedom. It's a journey, and nothing makes us happier than getting you there. Thank you, everybody.
Thank you so much, Sebastian. There's something that I picked up. I picked up 2 words from what you said, and it's basically similar to what Drisha did mention. It's a process. It requires commitment, and you need to literally review like your agreement annually with the debt counselors. If you get more money, then it doesn't mean it's money for partying or whatsoever, but you can use the money to actually just reduce your debt that is already registered with the debt counselors. Is that right, Sebastian?
100%. Guys, I need to tell you that the creditors will they'll reduce their interest rates on the promise that if you make more money, you'll give them more money. It's a two-way street.
It's a two-way street. And to me, I must just say from my side, it sounds like a whole lot of admin. I'll go with your last part. Rather save as much as you can and structure a budget accordingly and stay away from debt as much as you can, as much as possible. Because it's a whole thing. So thank you so much, Sebastian. You really gave me something to think about today. Thank you to both NDCA Sebastian and DCASA Drisha. Those presentations were insightful indeed. We will now move to the clarity seeking session or the Q&A. So I would encourage everyone to ask any questions that you have that is regarding to debt stress, debt cancelling process, life during debt cancelling, rebuilding thereafter. Because remember, again, there's no wrong question when it comes to understanding your financial well-being. And our goal today is to give you clarity. So goal of today, clarity and empowerment. The more informed you are, the better positioned you're going to make the financial decisions. So please do submit your questions in the chat and we will direct them to our panel accordingly. So while we wait for the questions in the chat, I would like to highlight the most important aspect of financial well-being, and that is knowing your credit profile. Your credit profile is your identity. It is your image, making it a key part of your wellness. So your credit profile, if the important thing about it is that once you review it regularly, it will help you understand your debt position. It will help you understand the errors that are in your profile, identify them, and it will help you monitor your payment history, also detecting fraud. So it's a simple habit that will help strengthen financial awareness. So before considering debt cancelling, understanding your credit record is essential, as it will help you give you the opportunity to know which credit provider to start with when renegotiating your payments agreement to help you manage them better. Understanding your financial position gives you control. Knowing your rights protects you. Asking questions before signing an agreement is critical. So today's discussion is about empowerment and not persuasion. So TransUnion, one of our sponsors for today's session, offers you and everybody one free credit report annually. So when you get a chance, as soon as possible, do visit www.mytransunion.co.za to access your free credit report today. The following video will help you learn more about how TransUnion can support your financial endeavors.
We see you, the South African, pushing from sunrise to sunset, grafting after hours to ensure your bills are paid on time. We see the dedicated student, skipping nights out to secure your degree, and the proud parent who knew you were an investment. We see the entrepreneur fighting for funding, born to take our country forward. We see you, Mzansi, and we think others should too. You can be the reason can't becomes can. Disempowered becomes empowered. Unseen becomes seen. Be the reason you get the credit you deserve. Be the reason you are seen. Be the reason things change. TransUnion. Information for good.
All right, thank you so much. I see the chat is full. Like, I was not expecting so much. But I will try to go through all the questions as fast as I can so that we can answer as many questions as possible. Okay. So, Sharon Omondi here says, what criteria do they use to declare someone over indebted? As you can find a 20-year-old being under debt review and it's clear proper information not granted to the client, something of that sort. But yeah, basically it's a 20-year-old who's under debt review and clearly they did not understand how they got into that position. Is that like, how is it done? That's basically what Sharon is asking in short summary. I don't know who will take that. Trisha or Sebastian?
Yeah, I can take it. So,
All right.
basically, it all depends. And I think I spoke about this in my presentation earlier as well. It's about being honest in your application for one. So there's many reasons for that. So firstly, when the 20-year-old applied for a loan, was he or she honest in the application in terms of declaring all their expenses? So quite often we find that consumers that go to credit providers for a loan will estimate or undervaluate their expenses, and the opposite is true when they go to the debt counselor. So the credit provider does not make an informed decision in granting the loan because they've declared their expenses as being quite low. So that's one. So again, as a consumer, you've got to be extremely truthful when applying for loans, declaring all your monthly income, all your monthly expenses, and The other reason could be a change in circumstance because life happens. You can apply for a loan or can be granted a loan, and a few months later, there might be a major change in circumstance where you're in an accident or a family member passes away, and your change in circumstances obviously changes. So that can result now in that person not being able to commit to the credit provider repayments. Sebastian, you can also add to that if I've missed out anything as to why.
I think you said it well, Trisha, and 100%, right? I think the honesty of consumers is important. I think in many circumstances, debt counselors have two things we can rely on. We can rely on the information on the credit bureau, and we can rely on the information given to us by the consumer. And if there's missing information that we're not privy to, then often those things can go by, right? And then we offer solutions based on the information that can be given. And loans are granted in the same way as Drisha has explained, right? So I think that's from that perspective, we rely on the information that we're given and what we can access.
Thank you. I hope, Sharon, you answered. And then we have another question from Samsung. Oh, sorry, there's no name, anonymous. What will the reason be for debt counseling being terminated at your creditors and you being handed over while you are still busy with the debt counseling process? Wow, I never heard of that. But clearly it happened somewhere.
Did I go for Sebs? You want to go for it? Okay, go for it.
This is a tough one, right? This is something that as debt counselors, this is the number one thing we want to avoid, right? We want to get to a place where we are able to onboard a customer, negotiate a repayment plan. Now, what happens is we take the customer on board, we talk about their expenses, and we build a budget that we can pay back to the creditors, and then we make a proposal to those creditors. And often or not, the creditors will respond to us with either an acceptance, a counter, or a counter, right? Now, we as debt counselors got to go back to the consumer and say, okay, based on the circumstances here, the credit provider has asked for a little bit more here, and credit provider C has asked for a little bit more there. And there are many reasons why these terminations can happen. But one of these reasons could be, well, if we don't meet the minimal repayment obligations that are required in order to get there, we are at risk of being able to terminate. And, debt counseling is not a game where we want to try to repay the least amount of money possible, right? Like I said a little bit earlier, it's a bit of a two-way street. There are rule sets within the debt counseling organization that allow us to solve debt problems in 5 years or less, but it requires a certain repayment or a certain cents to the rand to be repaid in order to get those acceptances. So one of the reasons that it can terminate is not meeting the counters in that circumstance. Trisha, what other reasons could we be facing?
Yes, you're 100% correct. So just to add to that, yes, if you do not meet the counter offer that they put forth on the table, or you default on your proposal. So credit providers can issue you with a 8610 notice, a termination notice, or if you default as per court order. So let's say we've now accepted, they've accepted your proposal, you on a repayment plan, and then in month 15, as an example, you default. So that is as per Section 88.3 of the National Credit Act, where you've defaulted on a granted court order, and then you actually terminated for that reason as well. So we mentioned it earlier, you need to be committed to the plan. Make sure that you are paying as per the granted court order. Let's say if there is a really unforeseen circumstance where you now retrenched and you actually found another job where your payment is or your salary is much lower than when you applied for debt review, then as a debt counselor, we can assist you. We actually issue a 17.3, a change in circumstance, and then we can assist you in that way. But if you ignore the credit providers and obviously don't come forth to let us know what's happening in your financial background while you're under debt review, then they are going to take action and issue you with those termination notice. So rightfully, they can terminate and they can hand you over.
Just want to touch on that as well, because I can see some comments coming in from Samsung. I see you're prolific with this process, so thank you. 100%, right? Like if for whatever reason you decide to change your payment date, right? But we haven't updated the payment so that you're always arriving one day late. A lot of pretty much all the banks run on semi-autonomous programs, right? So if that payment comes in late, it gets allocated late, 2 or 3 of those late payments, depending on which credit provider it is, and that system will automatically terminate that consumer, right? Like there are circumstances where a lot of banks, for a glitch in the system or whether they calculate their interest in a different way than other credit providers, don't often sometimes get to the required information in time and may issue an automatic termination, even though in everybody's mind nothing has happened. And in those circumstances, it's super important that you go back to your debt counselor and say, hey, what is this termination doing? And then a lot of times we get reinstated in a matter of hours, right? So just because you've been terminated doesn't mean it's not something that we can't fix almost immediately.
All right. Thank you so much. Yeah, I think Samsung is very passionate about and I'm sorry to call you Samsung, but maybe you can put your name so long that we can call you with your name because yeah, we only sing the device you're using. All right. There's a question from France. Okay, it's about how can we get TransUnion resellers for report as emerging new DCs. Okay, maybe Trisha, maybe you do have an idea because just he's talking about how can you get TransUnion resellers for credit reports as emerging. So clearly he's still a new DC. So maybe there's something that's the process that I don't understand. Maybe you guys can.
Miranda, I'm not sure if it's just me, but you are breaking up, so I didn't hear the question properly. Can you just repeat that?
Oh yes, the question is from France. So it's not about the session that we're having, but I think he's a new debt counselor because he said, how can we get TransUnion resellers for credit report as emerging debt counselors?
I see Seb's want to answer.
We've been trying to get TransUnion to work with debt counselors for a long time. I'm glad they're on this call. This is a perfect opportunity, and thank you, friends, for bringing it up. Yes, debt counselors, we've always wanted to work with TransUnion, and would love the opportunity to do so. So I hope they're listening. Thank you, friends.
Okay, no, I'll escalate the question. Thank you, friends. We'll escalate it. And then Samsung again. I don't know if Samsung is satisfied with all the questions that he asked us. Yeah, he has so many questions. If the court process is over, can you decide to pay your creditors yourself, or should it still be paid by the PDA? And then there's another one that he asked to say, why aren't we allowed in the court, during the proceeding of registering and stuff like those? Only DCs go there. So I think those are the 2 questions that I picked up from Samsung.
So Samsung, hi. So with your first question, so you asked if the court process is completed, and can you pay your creditors on your own? So if the court process is completed, that means it is done. You are actually issued with a clearance certificate, a Form 19, your debt is cleared. So when you are in the court process, you will have to complete the process, okay, right to the end, and then you'll be issued with the Form 19. You're not held prejudiced. You can obviously go and get more debt, buy a vehicle, buy a home loan, etc., etc. To your second point, let me tell you, it is a nightmare to be in court. So you do not want to be in court. So yes, prior to the Van der Hoeven Declarator, consumers were actually required to be in court. And again, I said it is a nightmare because you go and sit there from the morning, and then until your application is called, then you go on the stand and then you explain to the magistrate why you're in the situation. So to be honest, I'm glad that the Van der Hoeven Declarator came out, and now consumers no longer have to be in court, which means the debt counselor or an attorney on behalf of the debt counselor can take your application to court and get the order granted. Does that answer your question?
Okay, I'm not sure. I don't know if you replied. Can you check at the end? Because I'm with the questions.
Sure, no problem. He said yes. Okay.
All right. Beautiful. Thank you so much. So this one is from Paul. Paul says, I've realized that some married clients married in community of property can still do a single application. Is this legal, or is it allowed by the National Credit Regulator?
Go for it, Sebs.
I'm going to go first. Absolutely not supposed to happen, right? If you're married in community property, if you did that, it's because you're married for love and you're married for debt. So you're in it together, right? So there's a space there where actually debt counselors are legally required to be able to take anybody who's got debt married in community property and do a joint application. Now, the truth of the matter is once again, we are only as good as the information we have, right? So if it's not on the credit bureau, right, and oftentimes, you can catch these things out on the credit bureau, right? Like, and consumers, guys, I have to say, consumers are clued up, right? For the most part, they come in and we ask, you married in community property? A lot of them will turn around and say, no, I'm married A and C. And then we'll go into the credit bureau and check the credit report. And if there's no debts there that pertain to two different people, we have to take the consumer on face value, right? So we're not, so it's one of those situations where no, we want to do the joint application. We want to be able to solve the debt problem together. You're married in community of property. Your finances are combined. This affects both people. It needs to have both people on there. And the fact of the matter is that after a little while, your credit report is going to be updated. And if you do have joint debts, everything will be updated and you will be flagged anyway. So there's no point doing married and community property applications if for a single people, right? It's just a headache that happens in the end. But for many debt counselors, it's the easiest route to solving a person's immediate requirement. So something we're fighting against, but something really great question.
Thank you, Seth. Before I continue, Zach, thank you so much. I see you've really helped us a lot in the comments. So I'm reading the questions again, just so everybody others who are not or can't read the comments can actually get a verbal response, because I can see you really helped us a lot, Mr. King. Thank you so much for joining our session. I thought I should just pass that by, say I do recognize you and thank you very much for joining us. All right, so I hope Mpo is sorted. And then there's one from Kune. We still have a few more minutes, so we'll keep on talking. As a service provider, what should I look out for when a debt review company reaches out to us? Is there specific documentation that will show the legitimacy of the request?
Yeah, so yes, you can. So how do you verify a debt counselor? That's obviously the question, right? So you can obviously verify them on the NCR site. You can also check on SIPSI to see that the company is operational, how long they've been operational as well. I think with CASA and the NDCA as well, when we actually onboard or take in our debt counselors, we make sure that they are reputable. So it's a whole lot of background checks. So the service providers can also contact us. We obviously willing to give information and make sure that they are reputable in order to give them that service, and making sure that we're not providing services to debt counselors that's going to bring the industry into disrepute. Sebastian, if I left out anything, you can also add to that.
I think you nailed it.
Beautiful. Thank you so much. Mpo's second question, I'm not sure, but I'll just read it in case you have answers. Capitec has been a problem with responses and cancelling debit orders. How could this be handled? Does it have to do with anybody, the CASA, DCA, NDCA?
Well, I happened to be in the Capitec Century City offices on Monday, and Taz Francis, wonderful lady that she is, the debt counselor liaison to all of us, assured us that the new system is alive and kicking and that the situation should not continue any further. But you got to get your debit order cancellations 5 working days before the cancellation time. And she's willing to take, I didn't say this out loud, but from the DCs, there's still no way to contact the contact center itself. But she says, look, as long as you submit the debit order cancellation 5 working days before the debit order is supposed to go off, we should no longer be receiving any more of those problems. Now, that was on Monday. What day is it today?
Oh, that's the debit order she's talking about. Now I understand. You see, I did not understand. I'm like, okay, Capitec and But now I get it. Osimpo, I hope you are answered. And then we have another one from Brilliant. What's the best way to build up your credit score without getting into major debts, especially if you got an entry-level job?
So, the strange thing about a credit score, I don't know if TransUnion is on this call, but they say that you need to take out credit in order to build a score. So if you're a cash paying someone, you actually don't build a score. So if you'd like to actually pay cash for everything that you do, you're not actually building your credit score. A scoring is basically depending on your ability to repay your loan. So if I take out a loan for 100,000, and if I'm able to meet my monthly commitments every single month, paying it on the same date every month, not late paying, not short paying, my score actually goes up. Okay, so basically it is saying you need to take out a loan in order for us to see your paying habits. But if I'm saying I'm actually a cash payment payer, yeah, it's difficult for my scoring. So yeah, that's exactly how the bureaus work. So it's your ability to repay your debt that gives you that scoring, if that summarizes the whole thing.
Okay, yeah. No, I think I get you.
Yeah.
I get you as well. Sebs, are you going in?
Yeah, I think look, there's some good comments on the sidebar here. I think there's only one way to build credit. It's with credit. You gotta you gotta walk before you can run. And sadly, some of the only places you can go for credit. I mean, you can't just go out if you've never had credit before and you try to get a cell phone. Immediate rejection, right? It's a terrible situation. I've got kids now that have turned 18 and 21, and they're like, "Dad, what do I do?" I'm like, and it pains me to say so, but I send them to Fashini's, right? And I say, "Go get something small, and then get me something nice," but they never do. So I think this the easiest way, and there's only one way. You got to walk the walk. So it's you got to make sure. Also, there's little tricks and tips like just making sure you got the right contact details up on your credit with your credit bureaus, the right. Making sure your address is correct, updating your employer information. You can go on to pretty much any of the credit bureau websites, and they'll have those little tips and tricks for doing that.
Beautiful. Thank you so much. Mickey, so the exercise, what do I do as a credit provider if the consumer applied for debt review 3 years ago, but no repayment was received since? So basically, I think she's a credit provider. So one of her clients went under debt review and she's never received a single payment ever since, and it's been 3 years. So what must she do?
So in that instance, the consumer will obviously get terminated. So generally, if you do not make payments consecutively for 3 months, you will actually be issued with an 8610 and you are terminated. Okay. Obviously, the debt counselor remains the debt counselor on record until such time the consumer comes back, shows proof that I've paid up this particular credit provider. So on the credit provider side, if she hasn't received payments, are we talking about the client? Okay, yeah, the client did enter debt review. The credit provider hasn't received payments. Did they actually issue an 8610 to the debt counselor notifying that they are terminating? And generally at that point, like we spoke earlier, that account will now be handed over for legal collection, where an external debt collector will now jump in and now try and contact that client to make arrangements to receive that debt. And then you'll obviously take legal action and issue judgments, etc., towards that client, because 3 years has actually passed.
Okay. Thank you, Sis. Okay, I was so concentrating, I forgot to take the next question because, wow, it's a very interesting one. I've been wondering what happens. Okay, we have one from... Okay, we need to also address the issue of removing a consumer from debt review. Lots of scammers out there. Okay, before you answer that, I put the link there for everyone, the link that will help you access the NCR register, basically. So that's where you will put the DC number and check if the debt counselor that is you're talking to is registered with the regulator. That's number one. That's from me. At least I gave you a -1. Then we go to the next one. We need to also address that part. So can we address it? How do we remove? Because, the issue is, I think I have that question as well. Let me just do a follow-up to it. You find that you go under debt review and then you don't even know how you got into it, right? You don't know. You know, like some people don't really know how they got into debt counseling. Or sometimes you signed everything, and then the debt counselor stops operating. You don't even know where to get them. So I think that's the issue of the scammers, and that's where the whole scamming issue, it's broader, you know, it's got bits and pieces of branches along it. So maybe you can just answer it at a go to say, what do we do with these scammers? You are under debt review, you didn't know how to check it, you didn't meet Miranda to give you the link to the NCR website. So now you are already there and you don't know how you got there, or you are there, but you don't even know how to get out because now this person has vanished into thin air, literally, Sebastian.
I want to take a crack at a couple of these questions because there's some great questions that lead up to that, right? So some of the questions I saw on the side and something you mentioned just now was, once I go into debt review, after I get my court order, can I pay my debts on my own? Do I need my debt counselor after that? Look, at the end of the day, you're not obliged to continue paying with your debt counselor if you don't want to. We as debt counselors, we don't charge a lot of money on a monthly basis to be able to keep you on there and to be able to provide you with the service, which ultimately means that we're going to get you that clearance certificate in the end, right? So we're aiming for the end. And the real question is, if you don't pay through the PDA, your credit providers are expecting those payments to go through the PDA. If you miss one day, you are going to get terminated. And yes, on average, perhaps as a debt counselor, we make a nominal fee on the monthly basis. But if you miss that one payment, if you get terminated, all those interests and all that charges that we saved you is going to be loaded back up onto your repayment plan, and you'll have undone all of the good and received all of the bad. And is it worth saving that 200 Rand a month? That's a decision you're going to have to make. But over and above that, once you're finished with debt review, or once you want to get out of debt review and you're making those payments, right? And like I said at the beginning, people join debt review 6 months later, we don't talk anymore, right? It's like we were like the really hot girlfriend or boyfriend at the beginning. Now it's been 6 months and it's cooled down a little bit. I'm going to call you when I need you, right? So, and then a year or two later, you're like, okay, wait. Life's been so good for like these last 2-3 years. I've got disposable income. I don't need debt counseling anymore. I want out of debt counseling. Why am I still in debt counseling? They say, you put me in there, Seb. I'm like, whoa, wait. Remember the good times? And then you want to leave debt counseling. And unfortunately, the way that the landscape of the laws have collided is that if you go into debt counseling and if we do our job correctly and we get you a court order, you've got to finish the race. You got to become debt free. And there's plenty of companies out there who are preying on those people who don't want to be there because they forgot about the good times. They're almost to the finish line. But instead of paying their debts off, they go and they pay these scam companies who then go to court and try to get them off debt review and then disappear with 6 or 8 or 10,000 of their rands of their money, leaving them going, well, that's even makes debt review even worse in their minds, right? And they start spreading those rumors. There are those in the debt review process who didn't get their court orders, who could possibly leave at a different time, but that's just a technicality. The most important part is if you've entered debt review, you've got the benefit of reduced interest rates in certain areas if we've negotiated properly. Stick to the program, keep the legal payment, keep your debt counselor on your side, finish the race, get debt free, and then come off. Don't fall for the quick fixes. We know in life they don't work.
So nothing we can do about these scammers. The story is with the scammers who are scamming us. Yes, the process we understand, but what if a person scams you? Isn't there a place where we can report them, or do we just let go and maybe get another one to clear us? What do we do in a nutshell, Nje? How do we sort these scammers out? Because it's a process. We understand the process at this stage. We know it takes 5 years, it takes this long, or I can even consult the debt counselor to review my payments, and then I can pay much quicker than the 5 years. But these scammers, what do we do with the scammers? Because now I am scammed. what do I do? Do I now have to go to the police station? Do I go to the NCR? You get to NCR, they say this person lapsed 3 years ago.
Very good
But
question.
you are left with this thing is hanging on you. You know you were supposed to pay for 5 years. 5 years is ended, and now you have to clear yourself. You are on that follow-up to say, I've been paying. Where is this person? Person is nowhere to be found. You know, they are using a particular bank, that one that we don't want to talk about. But if you go there and you say you've been paying money into it, they say, we don't know. You pay the money. Where do we fit? You know, something of that sort. So basically, you're in a position whereby you've been paying a person that is nowhere to be found and nobody's coming through to help you. You are stranded at that point because now you want to buy a house. It's been 6 years. You are fine now. You are now earning 1.5 million. You know, you want to buy a mansion. You can't buy it because there's this name here, there's this tag that's on your name. How do we deal with that?
It's a very sensitive conversation at the moment, Miranda. I think the debt help system, which is run by the NCR, is currently down for technical reasons. If anybody from the NCR is here, but
All right.
under normal circumstances, you know, anybody that's in our association, either the CASA or from the NDCA association, I mean, we come across this all the time, right? We've got people who can't find their debt counselor. It's paid off. I need a clear certificate. You can come to us. You can go to anybody in our association. We will help you, right? It's a question of getting your paid up letters and then getting them sent by a registered debt counselor over to the credit bureaus. But I got to say, the credit bureaus, guys, TransUnion, we love you. We'd love to work with you, but a lot of the credit bureaus work on their own time, right? Sometimes they don't quite get to the emails in time. So people's urgency when it comes to coming off a debt review escalates so much at the end that, you know, they've seen the end in sights. They want to be debt free. They're earning that 1.5. They want to buy the house. They have the offer to purchase, and my name needs to be cleared. We understand your pain, and we will do anything we can to help you get there and to keep the industry in good repute, right? So if you do have those customers, you can send them to anybody in our association. We'll help them for free for that reason. Well, I'm speaking on the...
Yeah, no, I was just challenging you. Sorry. Sorry, ne? I was just challenging you. Anyway, forgive me again. Yeah, we've had a long Q&A session. There are still many questions that I've seen. And yeah, unfortunately, we don't have so much time. And I think there's a lot to talk about. So I do know that most of you have my email address. I sent you an email earlier and yesterday. Please do pop your questions there, and then I will share them with the relevant people who will be able to assist, just so we can get something more holistic. So if you didn't get my email address, let me just write it so long so that just send me the question there, and then we will answer them. I will consolidate something that will have more of a summary. I don't know if Drisha and Seps are with me on that. I think it will make it easier because now we're gonna spend the whole day here, and time is not on our side, unfortunately. All right. Okay, there goes my email address and my number. The Q&A has ended. Oh, there they are. Yes, there they are. Thank you so much. Those are my numbers. That's my email address. Please do drop your question there. Send me a WhatsApp. My WhatsApp is also active. Yeah, you're also welcome to call me, but it's a work phone. I knock off at 4, please. And I would like to thank you all so very much for joining us. I think with all the questions that we've gone through so far, it is clear that debt counseling it's a long process. You know, it's a whole lot of admin. That if you get a chance, obviously with your support, Drisha and Seps, it is best to avoid it by all means. The best way is avoid. The best thing is manage your credit. Take the little that you can. Don't take what you don't need. Take credit when you need credit. And Yeah, it's a hard thing. If we had time, I was gonna tell my life story to give you my experience as to what happened to me and how I managed to get myself out of it without even going for debt counseling. Because like I was saying earlier, and everybody actually there, Drisha and Sebastian were saying, it's a process, it requires commitment. That process and commitments does not only start with debt counseling, it starts with you. So before you even go for debt counseling, like I said, approach your credit provider, say, at some stage, oh, I talk too much, I know, but let me just brush this out. At some stage, the debts that I had together with the income that I had at the time, you take a debt when you're 80 and you're 50. Then tomorrow you lose your job, you get a job where you get 5,000. It's hard to cover those costs. So I knew at that point, go to the credit provider. The debt that I was supposed to pay this much amount, I said, guys, I'm not working anymore. I don't have money. I'm earning this much. Can I pay 500 rands? And I stick to that 500 rands. And you know what's the nicest thing about that? Sticking to that and paying as you had agreed with the credit provider will not affect your credit score. Your credit profile will always be up to standard because on a monthly basis, you are sticking to the agreements that you made. So that's why I said www.mytransunion.co.za. That's where you will register, see your profile, see how your debts are, see if you don't have ghost credits on your profile, because we do get those as well. And just manage those. See how you can manage your credit profile. If you manage your credit profile, you will be able to start the process on your own and commit to the process before you even get to the deeper point of saying, I can't breathe. Let's look at, I look at debt counseling as rehab, where you need rehabilitated, where you are helped to actually come back to yourselves. It's not where you go for fun. It's where you go when you are really in need. And when you come back from rehab, it doesn't mean you can go back to the tavern, because once you drink one alcohol, you will go back. So that is why after the 5 years of debt counseling, it's important to try by all means to stick to the process again, still continue to the commitments that you made, so that you don't get into more debts than you actually can afford. So with that said, ladies and gents, CASA, NDCA, Sebastian, NDCA. Okay, can I call your names? Drisha from the CASA, Sebastian from NDCA. Thank you very much for joining us. And also TransUnion, Groups are us, Amplifin. Thank you for partnering with us. It really means a lot. May you everybody have a lovely, beautiful day.